Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. Today, we are going to talk about private lending and mortgage investment corporations, better known as MICs throughout the industry. My guest today has been in the industry since almost as long as I have, by the looks of it, according to LinkedIn. Anyway, started as a mortgage broker back in 2008, worked for Investor Group, was a business development manager for Home Trust, and got scooped up by our good friend Hallie. And now he is actually the National Broker Relations Manager for Fisgard Asset Management. Reaza Ali.
You got it. That's a long one. That's a long one. Thank you very much, Len. I appreciate that. Yeah, even going back further than 2008, I actually, and you'll remember some of this, started in the industry with household finance back in the day, HFC. So yeah, it's been almost 26 years now.
Yeah. Wow.
In the industry. So yeah, I always say I really don't see myself leaving it now.
Yeah, it's too late and too hard to retrain.
It's too late. So. That's right.
And you're probably not unlike me. We're pretty much unemployable outside of this industry. So
yeah, you kind of wonder what you do with yourself afterwards. It's but I do love it. Absolutely love the people in the industry.
7-8 years ago, somebody asked one of my team if I had gotten tired of this because I had been and worked for a concrete company and sold concrete and then new homes and a few other things, but I've moved around within those industries as well, right? And when I heard that question, I'm going like, I don't think I'll ever get tired of mortgages because there's no 2 days the same. And we just had another week where it's like there's a whole bunch of different things that came across my desk which I had never seen. So
that's one thing I do say. There really is not a day that's the same. You hear so many different scenarios. Although we've been in the business as long as we have, and we've probably seen most of everything. But the nice thing is each day is different. It does bring a different scenario, and the industry's ever changing. So you do have to stay on top of things.
That is true, and it's hard to do. I can't imagine being part-time in the industry at this point. There's a change every day. Yeah, so
very difficult. But talking about change.
Yeah, talking about change. Well, I guess part of the change is asking this question. The average Canadian probably lumps private lending in with mix and syndication and all of those different definitions that we understand. But of course, lots of things that we see happening in the private lending side. What makes that different from mortgage investment corporations, which is what Fisgard is?
Yes, and we do love talking about this because, to your point, the word private is associated with everyone, and that's not necessarily the case. I like to break it out in this way. Either one of us can be an individual investor. We want to put our money out on a particular property. There's certain risks that go along with that. And as an individual investor, we take that into consideration and charge accordingly. But at the same time, we're human. We listen to the news. Individual investors react differently. Whereas when you're talking about a mortgage investment corporation, it's exactly as it sounds. Almost institutional private lending, if you will. And there's infrastructure behind it. There's regulations behind it. And when I talk regulations, whether it's securities commissions or the broker regulation side in each province that we lend in, that is a big part of the operation and consideration. So we have to protect our investor funds. Whereas an individual investor, it's their own personal money going out on a property, and all of the risk is on that property. Versus someone investing into a mortgage investment corporation, their risk is spread amongst the entire portfolio.
Right. It's not quite syndication, but it actually goes to that next step where it's however many investors, and then there's probably hundreds, I'm sure, with Fisgard, if not thousands.
Yeah, there's literally thousands,
thousands of investors in the corporation.
Exactly, and it varies. It varies between organizations and mortgage investment corporations. But to your point, you're correct. We actually have control on that money. We put out an operating memorandum to our potential investors and our existing investors, and they look at the risk of the portfolio and our history in the business and determine if it's somewhere that they would like to place their funds to see a reasonable return on their money.
Excellent. So, but lots of news lately about private lenders, especially in Ontario, and how unregulated they seem to be, but especially after recent collapses. So, how is that different in the world of mix? We don't see as many mix collapsing over the years, right?
Right. And, I go back to just helping the audience understand when you talk about private lending and educating our broker community as well on the history. Private lending's been around, if you think about it, since the start of time.
All the way back to royalty, I'm sure. So
precisely, and this is how I describe it. You have a village, if you will, and you have a family that either owns the village or the land, and the people that need something. Back in the day, they may have been trading animals, as an example, right? That evolved to what we know now is the cash transactions. Private lending's been around forever and ever. What the difference is now is it's evolved into what we now know as a mortgage investment corporation or mortgage investment entities. There are different formats out there, but the individual investor, as we term it, mom and pop, that have some money laying around and they're looking for a return, it can be quite risky if you don't really understand all the risks in putting your money out onto a certain property. So working with professionals like yourself, if they choose to go that route, is critical. And that's where someone like yourself would buffer that risk and look at it and advise appropriately. When we talk about what's been going on lately, I almost equate it to people are just looking for the silver bullet solution in accelerating their wealth. And there really isn't one. But when you take that route, you have to understand there's enormous risk associated with that, and you have to be willing to understand you may risk losing your money as an individual investor. The difference with dealing with an institution like ourselves or any of the other operators out there, we haven't seen, to your point, any sort of collapses because we are highly regulated. Every year we're audited. We are regulated by the securities commissions. So there's a lot of thought that goes into the risk appetite. I always say there are two number ones for us: deploying our investor funds so that everyone can see a decent return and a reasonable return. But the other number one is making sure we get all of those funds back and not lose any of our investor funds on any sort of trend, even whether it's an individual transaction or a multitude. Those are the thoughts behind when we look at deploying capital. That it's a big focus for any one of us out there, not just Fisgard.
Yeah, and that exit strategy, as we call it, right, is always important. It's we've looked at obviously thousands of deals over the years. We've helped over 6,500 families with mortgages. It's like if you're in a private mortgage or even in a MIC, what's the strategy? How do you get out of it? How does the investor get its money back? And that is almost the point where you have to start and then work the deal backwards, right? So it's like, okay, if we do this, and this at the end, is he going to be in a better place and hopefully get out of it? And that, of course, is important to your investors. And even if it's a private individual, And that's where they say 86% of the complaints on insurance or filed claims on insurance are coming from private individuals who weren't happy. The borrower was happy they got the money, but the actual individual lenders are the ones that don't always understand, I think, is the problem, what the scenario is, right? The money's going to stay there until the end of the term, and that's when you can either renew it or ask to have it back at that point. So
it's assessing the risk. We always like to say when we're looking at an application, we always look at the file with the exit in mind, as you said, working backwards. Does it make sense that, and can we see an opportunity that we will get our investor funds back without losing anything and putting their money at risk? And that's always in the back of our minds when we look at any file out there. The challenge I find, and it's, I'll put it this way. I love cars. I'm not a mechanic. I don't know how to assess any of that stuff. Maybe some basic things, but that's why we take it to a professional that understands that particular vehicle. In the world of finance and the world of mortgaging, not every individual understands all the finite details of risk and what potentially may happen with their money. And whether it's someone purchasing a home, as we say, it's always the biggest investment any one of us will make. But as an investor, you have your capital sitting there, and you want to put it out on a particular file. It then comes down to how good are you at assessing not just the property, but the market, what's going on in the market, and who are you lending this money to? Do they have the capacity to repay you? And not just on a monthly basis, but ultimately, as we talked about, the exit, can you get all of that money back so that you can then use it however you see fit?
Yeah, it's a tricky game, and putting someone in a worse situation doesn't serve anybody any good at all, right? So let's talk about that client. So stress tests, obviously a big thing right now. If you look at a 1-year term at the bank, you really have to qualify at almost 9% anyway. So this is at 7% interest for 1-year terms at the moment, right? Coming down a little bit, but not a whole lot. Stress test that at 9. Your world's not that far off of that number anymore. So how has the client changed? Is the average application better, worse? I know for a long time we mix where, the world where we took our 500 and low 600 kind of scores, right? So what change is your part of the industry seeing there?
You're absolutely right. So I go back even 10 years ago, and you see this evolution of the client simply with things like regulation changes. Not that they're poor payers. As we talked about, the landscape of regulations change all the time in this business. Unfortunately, in some cases, it shifts clients out of the banking side, the institutional lending side, into our space now. What people may have thought is private lending were always for poor payers is not the case at all anymore. We're seeing, on average, probably a 680 credit score on the portfolio. And we're coming across 700 plus 800 credit score files. So these are people that handle their money well. They are just not able to qualify at the institutional lending side. They're not fitting the box, if you will. And as you've seen over the last few years, the box is shrinking in many cases.
Yeah, no question. Self-employed especially, right? They've
Yes.
tightened up on that so much that it really is, which is one of our podcasts about the different ways we have for financing that, and private lending is definitely part of that conversation, that regardless, if you're going to claim $25,000 a year on your taxes and your business makes $2 million, it makes it really hard to get a house for you, right?
There's a trade-off, right?
Right.
Someone's in self-employed for many different reasons, and one of those reasons is the benefits of the tax side. There's a choice to be made if they want to end up on the institutional banking side with the best rates. They can now refile their taxes, but you have to consider the amount of tax that you're going to have to pay. And as a self-employed individual, why would you want to do that? So always look at these type of transactions. And to your point, self-employed makes up a large component of any of our businesses. It's not even self-employed only anymore. It's multiple sources of income that are involved. People just have to do that to survive or even get ahead. But that does not necessarily fit the box on the institutional lending side. So it really then comes down to somewhat of a business decision. It's a business transaction, although it may be dealing with your principal residence and in many cases investment properties. But it really does come down to a business transaction. And is it worthwhile? Is the return there for what you're paying for a 1 year or a 2 year term mortgage? And then ultimately moving out to better financing down the road. But I always say there are clients that majority of them can move on into a better financing situation, but there are many that will just continually use private equity. That's really what it comes down to, private capital. It's not new. When you look at people that have larger portfolios, you could probably answer this one, Len. Are they really utilizing the banking institutions, or are they utilizing private capital to get their transactions completed?
Yeah, in a lot of cases, it's more towards the private side because the bank is so hard. If you your business cash flow has to be super impressive to the bank for they'll lend you any extra money if you want to do something. But you have equity in the company, you have equity in properties, possibly, right, or equipment. So there's lots of other ways I think that they're going about getting money to help them grow, because that's basically what that money is usually for, right?
Exactly. That's where the business mindset comes into play. Is yes, we might be paying X in a percentage on this mortgage amount, but the benefit is, whether it's the growth in equity or just growth in the portfolio itself, far outweighs that cost.
It's funny you say 680 because the new 650 is the 700 on the regular banking side. It really has come to that a 700 beacon is kind of where they want to look at you. Before 650, 620 was okay. We can get by with that, but not anymore. Right?
Well, you remember the days with the insurers, you could do a 600 or even a 610 credit score, and you're getting an insured file completed.
Yeah, even in that high five sometimes, right? But 10%
That's
down.
right. Yeah.
But, yeah. It's
those days are gone,
long gone, right? Yeah, the banks have tightened up. I don't know if that's all because of OSFI or the other part of their inspectors, but it's they definitely have made it harder for individuals, regardless if it's self-employed or not. But I think that's where you see a lot of them, transitioning to looking at the mix and things like that to buy a property. I actually know a client who's been in a MIC mortgage for almost a decade.
Are they with the same institution, or do they need to move around every so often?
Yeah. They just they renegotiate every year, and but again, he doesn't change how much he claims on his taxes, right? So
exactly,
it's a trade-off. He's going to show the government, I'm paying you $25,000, and he's just keep his mortgage away from the bank altogether. So
right, but for that individual, they must see a benefit to doing this. Otherwise, from a financial perspective, there must be a benefit there for them on a grander scale.
Not 100% sure what it is, but it's working for him. So he says, why would I bother to change it at this point? I'm not going to start to claim more taxes just so I can go back to a bank, right? It's basically, it's a mentality, right?
It is. And I know everyone wants to get back to that prime lending side eventually. Most people do. But when you're talking multiple sources of income or the self employed community, uh, it's something that needs to be thought of a little bit deeper.
So you're Fisgard licensed from BC to Ontario, or right
That's
across
correct.
now?
Yeah, we're currently from BC to Ontario, all the provinces in between.
Yeah. So what kind of changes are you seeing in the markets, given that everything has definitely changed over the last 2 years?
Well, I can tell you, Alberta specifically is doing quite well. You know, Alberta has always been one of those provinces that has been up and down, obviously, with whatever happens with the oil. But there seems to be a little bit of a different feel to it over the last few years now. The oil is the oil. Everyone knows about that. But it seems like there's a little bit more diversification happening in the province. You see more interprovincial movements into Alberta. I'll tell you this, and I'm in Ontario, driving around yesterday, and on our news, I hear an ad promoting Alberta for people to come and move and incentives to come and move out to Alberta. So that's a big focus, obviously, for the province. But from a lending perspective, risk, we're seeing it's a good market to do business in. It's been steady for the most part. Although I do believe you guys are going to start to experience a number of things that us in Ontario and the folks in BC, which are similar markets between the two provinces, have been experiencing for the last number of years with, the supply and demand piece. So in Ontario and BC right now, with the run up of values, the enormous demand for housing, coupled with the influx of the immigration piece, has really put a hold on the market. Let's say, so they're trying to control that a little bit, bring the affordability piece back in line. But quite frankly, I really don't see that happening anytime soon. Just again, basic economic supply and demand. I think we're years and years out from that ever balancing off.
Yeah, I don't think what the governments are doing is going to make that much of a difference in the housing market, because, like you say, we've never really built more than 300,000 homes a year across Canada, like province one coast to the other.
And we've had 1 million people come in.
Yeah, so had the math just doesn't make sense. You bring in millions of people every year. For almost 4 straight years now, right? That there's 2 or 3 million new Canadians, which is great because we need them for a variety of reasons. But it's like, if there's no place for them to live, and I've just done a couple of mortgages in downtown Toronto, 2-bedroom apartment, 850,000 even to this day, right? So it's it's not changing. We're 850,000 here. We get you a very nice house on a big acreage and some outbuildings if you want to have a pony or something, I guess. But it's funny. You're right. The change in Alberta right now is this is my 5th boom. I've been through the boom and bust cycle so many times in this province. But it's like, it's not just oil this time. Pipelines open. That's going to be huge for Fort McMurray, obviously.
Just fantastic. Yeah.
A $15 billion Dow Chemical hydrogen plant in Fort Saskatchewan, just outside the city. That's a game changer for Alberta, just as another product. Carbon capture in Cold Lake is a huge project as well. Plus, the military is revamping, doubling the size of Cold Lake's base, and things like that are going on all around the province, right? Calgary always has a problem with housing. It moves first. $5,000 credit for tradesmen because we need them. And
that's the ad that I heard on the radio yesterday.
Yeah, it's a tax credit, so that's good because we also have the lowest income tax to begin with, so it's going to definitely help, right? So there's lots of things that are changing. I know Saskatchewan. I hear stories from there that things have ramped up quite a bit, and it's one of our agents is Ukrainian, and so she's done a lot of work with the Ukrainian immigrants. She said they go to Toronto or Vancouver first, and they realize these are big cities, but they're not cities that you can afford to live in, right? They're the European style with still some corner grocery stores, I'm sure, in some of the older neighborhoods and things like that. But it's not. It's just the cost of living is just out.
Yeah, and to your point, I always talk about it's cost of living, it's lifestyle. What kind of lifestyle does someone desire? Although we don't lend in Atlantic, they saw the boom as well through the COVID time, and they're still quite active out there. Just from an affordability picture, it is a different lifestyle. And that's something that people do have to consider when they're going province to province. If someone grew up in the GTA or GVA, it is a different pace, but everyone has to determine what is good for them and try to build something for themselves. But from our perspective as a lender, we're still lending in all the provinces that we operate in. We haven't changed too much, but there are certain things, when you look at what's been going on over the last couple of years with not only the interest rates going up, values taking a step back aside from your own province, but in Ontario and BC, we absolutely saw that values take a step back over the last year and a half or so. And again, from a lender's perspective, we have to account for that, and when we're handling our investor funds and placing them on these files, does it make sense? And do we see that exit where whoever we're lending that money to, they're in a position from an affordability picture, number one, and number two, there's a clear path to move on to a better financing situation. Our philosophy is one that we want your client, but we don't want them forever and ever and ever. We would like to see them move on to a better financial position when it comes to their largest debt. So that's a position we take, and we do our best when we underwrite any of these files to take that into account. But once again, protecting the investor funds constantly.
Yeah, and that was, we started off by talking about the difference between private individual lending, which we don't allow in our brokerage.
I know many that don't.
Yeah, it's the high risk part of it, right?
And reputation as well for yourselves.
Yeah. The mortgage investment corporations give us an extra level of protection. If you like, you do your due diligence as well as we do. So it's kind of a double layer that's there. And that I think should be key for anybody that's considering having to be anywhere other than the bank, that the reputation of the lender you're with, for one, is hugely important. If it doesn't look right, there's a reason, usually, right? And or the fees or something like that
there's a lot of digging that needs to be done on your part, obviously, on behalf of your client, to ensure you're placing them with an appropriate lender out there. Everyone's different. Everyone has a different business model. The beauty of the position you're in and the market that we're in today, there's so many choices. There are a multitude of options out there that I always say there's probably very little reason that you should say that you cannot bring a solution to your client. And that's a great position to be in. From the consumer perspective, trusting your judgment and understanding what's best for them at that time is critical as well.
Yeah, and that's why our slogan has been and will be real life mortgage solutions. Right? It's like there is a fit for everybody, but it's gotta work all the way around. Right? It's got to be good for the lender. It's got to be good for the client, and like I say, it's a longer term project that you have to plan that exit strategy so that everybody is in a better place when we're done with the term of the mortgage, right? So
Yeah, I always say it's you take on an advisory role, not just a mortgage processor, if you will.
Yes, we love the mortgage processors because I don't know how many people we've asked over the years, who was your mortgage broker? And they have no idea, right?
Right.
Transactional brokerages, I never thought it was a good business idea. And that's why we endeavor to train our agents as best we can and support them all the way through their mortgage career, right? So
it's a big win for your consumer base and your agents for sure.
Yeah. Excellent. Okay. Well, I'll let you get back to work. Ellie's probably got you on the clock there somewhere. And,
there's always work to be done.
Yeah, I'm sure. We appreciate your time today, Reaza, and we will talk to you soon.
Yeah. Thank you very much again, Len. I appreciate it. Good seeing you.
Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.